Hey everyone, welcome back to another dividend investing video, and pardon me, I'm a little stuffy and under the weather. Now today we are back with some interesting news regarding the Walt Disney Company, ticker DIS. On February 8th, the company reported some positive earnings, and in that earnings call, CEO Bob Iger gave dividend investors the news we've all been waiting for. Disney plans to reinstate their dividend by the end of the calendar year 2023. Their dividend was previously suspended back in 2020 due to the impact of the global pandemic on Disney's business. So let's dig into Disney's business and make some educated guesses about what this reinstated dividend will look like and if Disney is a stock worth buying right now. I'm Nick, and this is the Dividend Growth Income channel. Thank you for joining me today. I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could, please do me a favor, smash the like button and subscribe to keep up with future videos. This helps us out more than you can imagine with the algorithm, so we can bring you more quality dividend investing content. I don't need to go too much into Disney. We're talking about one of the world's most iconic and beloved companies. It was founded by Walt and Roy Disney in 1923 as the Disney Brothers Studio, and the rest, they say, is history. So today the company is divided into three primary business segments. You have Disney Entertainment, and they oversee the company's full portfolio of entertainment media and content. This includes their streaming, like their Disney Plus. Then you have ESPN. This is responsible for the management of the company's sports content and their products and their experiences, like their live sports, all across Disney platforms worldwide. And the third is Disney Parks, Experiences, and Products segment, which handle the theme parks, the cruise lines, and the resort destinations by Disney. Now, there's no denying these are some amazing brands. There's a lot of appeal to owning a slice of this business, especially if you're a fan of some of their properties like Star Wars or Marvel. I was pretty excited to hear the news of the dividend being brought back as a dividend investor. And guys, I want to know down in the comments, do you own Disney? And does the news that the dividend is coming back impact your own decision on buying Disney here in 2023? And real quick, the majority of the charts I'm showing you today come from SeekingAlpha, and I've partnered with them to bring you a special offer on their premium subscription. If you check out the link in my description, you'll have the option to get a 7-day free trial of SeekingAlpha Premium to try it out, and if you want to keep it, you'd only pay $99 for your first year. This is a nearly 60% discount to their normal pricing. It comes out to just over $8 a month. This is a really solid value, and you know I like a good value. I use the site for a lot of my own research. I also enjoy reading the articles that are available. So again, check out that link in my description if you like. It does help out the channel as well, which is much appreciated. Back to Disney. Their business was severely impacted by the pandemic, as many businesses were, resulting in a few tough years for Disney as well as its shareholders. CEO Bob Iger was brought back in November of 2022 in an effort to turn things around. And the company's streaming service Disney Plus is still operating at a loss. Iger is on a mission to cut costs and also announced they will be removing 7,000 jobs, which accounts for roughly 3% of their workforce. As for the stock, shares of Disney are down 28% year to date. The share price peaked about 2 years ago in March of 2021, over $200 per share, but has dropped down dramatically in the last couple years. The current 52-week low is $84.07, and the 52-week high is $156.73, so Disney is still trending closer to those lows. Zooming out, Disney's 5-year performance is nearly flat. It's just up over 2%, and its 10-year performance is nearly 100%. So none of this beats the broader market, the S&P 500. Disney has been a underperformer for the last decade. In terms of valuation, Disney is trading at a forward PE of 25.56. This is 50% higher than the communications sector median, but this is Disney. These brands are going to come at a premium. It is notable that the forward PE is 37% lower than its 5-year average of 40.94. Disney is one of those stocks where the valuation just became too ridiculous during the market run-up in 2020 and 2021. One thing we want to see from Disney for reinstating this dividend is higher free cash flow. They're going to need to improve there. Free cash flow has not returned to pre-pandemic levels. Currently, it's just 6 cents per share over the last 12 months. We are seeing recovery in their earnings per share, but again, we're still not back to pre-pandemic levels, still a ways to go. And looking at what their next dividend is going to look like, let's look at what their payout ratio was historically. We can see their dividend took up more than 31% of earnings, pretty consistent really in that high 20% range. Here are some hypothetical projections from SeekingAlpha. So a 20% payout ratio would give us an annual dividend of 84 cents, and a 30% payout ratio would give us an annual dividend of $1.26. So I think around that dollar per share mark, plus or minus 15 cents, is a pretty decent estimate for what we can expect once this dividend is reinstated. Still yield of around 1%, I think is most likely what we'll have with Disney. That's close to what Disney used to pay. This was never a high-yielding income stock. Over the last 5 years of Disney paying its dividend, the average yield was 1.37%. So investors who need income right now are not likely going to be very interested in owning Disney. Investors with a longer outlook, however, I think there's a compelling case to own Disney even without the dividend, but their business has had some struggles, and with a beta of 1.18, this is going to be more volatile than average. This was a nice dividend growth stock for a little bit there, though, even with the smaller dividend up until it was cut in 2020. It did stay stagnant for a few years during the financial crisis. So I think Disney is one of those companies that they're impacted higher than most when financial times are tough. And they paid their dividend on a somewhat unusual schedule. From 2015 to 2020, the dividend was paid out semi-annually with a payment in January and a payment in July. Prior to that, the dividend was just paid out once a year in January. Now, with Bob Iger mentioning that they're looking to reinstate their dividend before the end of the calendar year, I think the most likely scenario is that in January 2024, we're going to get a dividend payment, with the next dividend date somewhere around December 15th. Whether they decide to go annual, semi-annual, or quarterly remains to be seen. A couple other things I'd like to point out about Disney before we wrap up here. They did issue some shares after 2020. Looks like Disney was buying back shares pretty steadily up until 2019, when about 16 million shares were issued, and then another 15 or 16 million were issued over the next couple years. This is not a huge dilution, but it would be nice to see them begin buying back shares as their business recovers, and right now it is cheaper than it's been in a few years. And Wall Street analysts do love the stock, no surprise. Between 32 analysts, we have a buy rating of 4.43. That's rated a buy, 19 rated a strong buy, 8 a buy, and 5 a hold. The average analyst price target from SeekingAlpha, we have $129.88, almost $130. That represents about 20% upside from the current levels. Look, I think Disney is a great company with a lot of promise, but just keep in mind its performance history, it doesn't even come close to the S&P 500 as buying SPY or VOO, and its dividend yield almost certainly is lower than that of the S&P 500. I don't own Disney. It's another one of those stocks I was forced to sell in my divorce a couple years ago, unfortunately. But if I did own it, the dividend would just be a bonus here. You're holding this hoping for a turnaround and to make some money. Long term, I think it's great. Disney's going nowhere. It's some of the most popular, iconic brands in the world. Star Wars, Marvel. This is great, top quality content. And while I don't plan to own any Disney at this time, I'm going to be watching them over the next couple years as they get back into paying a dividend, and maybe by that time I'll see a place for it, maybe in our dividend growth income portfolio once we've built up our core positions some more there. Now, I'll keep you folks posted with the latest info as I learn it. Again, please share your thoughts on Disney in the comments, and make sure you're subscribed and have that notification bell hit for our next video. If you're not connected to me on Twitter, you can check me out over there at Div Growth Income and connect with me and all the other great dividend investors that are on Twitter. We have a great community of folks. Until next time, folks. Keep investing.